State law provides many tax incentives in the forms of refunds, incentive payments, tax credits, and exemptions for companies to relocate to Oklahoma, to increase payroll, to increase the number of employees that they have. But tied to those incentives are a requirement that they maintain payroll levels or the number of employees. And if those companies have been forced to reduce their payrolls or number of employees, they're in danger of losing those tax incentives that were previously provided to them. A very popular incentive for recruiting companies here in Oklahoma is the Quality Jobs Incentive Program. Under that program, incentive payments are made to the company of up to 5% of their payroll for up to 10 years for providing increased jobs here in Oklahoma. As a requirement for that, they're required to have a minimum average payroll or wages per employee, a payroll of up to $2.5 million within 3 years of signing an incentive payment contract, and also provide insurance benefits to those employees. But the statute requires if they do not meet that minimum threshold of $2.5 million in total payroll, then they will lose those incentive payments. And if the wages, the average annual wages, drop below the minimum requirement, then those payments can be suspended. Yes, one of the major incentives for manufacturers in Oklahoma is a property tax exemption for a period of 5 years. And that's available for manufacturers that construct a new facility in Oklahoma, expand an existing facility, or acquire a new one. To maintain that property tax exemption for a period of 5 years, the manufacturer must maintain their base payroll amount, which is the payroll that they had when they started the exemption for a period of 5 years. And if they fall below that, then they lose the exemption, not only for that year, but for the balance of the program. In the past, when this has happened, I think to the recession in 2008, manufacturers asked for relief from the tax commission, who determined that they simply did not have authority under the statute to provide any kind of equitable relief in nature due to the poor economic conditions. There's an investment tax credit for corporate and individual manufacturers, also provides for aircraft maintenance facilities and some other type facilities of up to 1% of the cost of property that they invest in their company, or if they increase their number of jobs, they can get an income tax credit of $500 per employee. If they take the credit based upon the number of employees, they're required for a period of 5 years to maintain that level of employees. The incentive is $500 per employee for a period of 5 years. But they lose that, again, if they've reduced their payroll, especially during this time due to the COVID-19 pandemic. There's a sales tax refund available for purchases of computers, data processing equipment, or communication equipment for companies that provide computer services, data processing services. But to get that refund, they're required to create at least 10 new jobs with a minimum average salary of $35,000 for a period of 3 years. If that number of employees drops below that amount, not only do they not qualify for the refund, but a refund they've already received must be paid back to the state. For manufacturers who take advantage of the property tax exemption, the last report I saw for 2019, there were approximately 200 manufacturers over 53 counties enjoying that. There's a large number of quality job incentive payment recipients. How many of those are in danger of losing these is unknown at this time, because you still have the end of the year. But as the companies open back up and they make business decisions because of the impacts that have they felt because of the pandemic, they need to keep these incentives in mind so they don't lose them. Senate Bill 1075 has been passed by the legislature and is awaiting the signature by the governor, that would provide that quality jobs incentive payment recipients who have had a drop in payroll between April 1 of this year and June 30th of next year will continue to receive those payments even if they experienced a drop in payroll. And that bill is awaiting the governor's signature. Any business that's taken advantage of these tax incentives should seek legal counsel, talk to a tax practitioner to determine what the parameters are, to find out if they are in fact in danger of losing these incentives because of what's going on in their business today.